Welcome back to another episode of the SCI Mortgage Podcast, where we are here to empower those of you who are self-employed or real estate investors who don't fit into the traditional lending boxes to provide financing solutions if you're looking to purchase a property or build your real estate portfolio. On today's episode, we're going to cover how to use the free bank statement calculator located on the SCI Mortgage website so you can calculate your own income to see what you would potentially qualify for if you're looking to purchase a property. So let's dive right in. All right, so you're going to head over to the scimortgage.com website, and once you're there, you're going to go to the Tools and Resources tab at the top, and you will see a bank statement calculator tool. Once you click on that, you are in the bank statement calculator and you can start calculating your income. So once you're in the bank statement calculator tool, you'll see at the very top there's a basic snapshot, which is going to give you your total deposits, your average monthly deposits, your expense factor, and what your qualifying income would be. So how do we calculate all this? So before we go into utilizing the bank statement calculator, I think it's important just to mention that this is when you're purchasing a property using a 12 or 24 month bank statement loan option. So instead of using your tax returns, you can essentially take all of your gross deposits that are considered income earned from your profession or multiple professions, and then derive an average from that. And once you apply an expense factor, you can actually derive what your qualifying income would be without any sort of tax returns or any other additional income documentation in order to calculate or determine what your debt to income ratios are. So once you scroll down a little bit, you'll see in the settings options, you have the ability to calculate your bank statements based on a 12 or a 24 month average. The only reason why you'd want to use a 24 month average is the investor is going to give you a better interest rate on your loan if they're able to calculate your income over 2 years versus one. So for our purposes, we're just going to use the 12-month average since that's the most common bank statement loan program that we typically do here. And then for the expense factor, you'll see in the drop-down menu, you have as low as 10% all the way up to a 50% expense factor. So why the expense factor can go up to 55% is if the investor or multiple investors for that matter we work with, they have different expense factors that they will apply based on what your profession is. So for example, if you're a streamer and you work out of your house and you don't have a brick and mortar building and you have very low overhead and not a lot of expenses other than, your basic monthly internet or maybe what you're applying on marketing with, SEO keyword searches. Frankly, I don't know the back end on how all of that works, but essentially you don't have like typically multiple employees or other large reoccurring expenses. Well, you can utilize a lower expense factor than when you're calculating your income. Now, depending on the investor that we're working with, they may just simply apply a 50% expense factor right off the top, unless we can provide them with some additional supporting documentation to convey that you have a lower expense factor based on what your business is. So how we would do this is with a tax preparer or a CPA providing a letter that essentially states, based on your most recent tax returns filed, we use an expense factor of X. So you do have the ability to go as low as a 10% expense factor, and you'll see shortly why that can make a big difference within your income. So for right now, let's leave it at a 50% expense factor because that's typically what requires no additional documentation in order to derive what your income is going to be after we show what your gross deposits are. So then as you move further down the page, since we selected a 12-month average, you're just going to see a 12-month calendar year. So one other thing I want to point out here is one of the great features about the bank statement loan product versus a traditional loan product is we're going to take your most recent 12 months bank statement. So depending on where we are in the calendar year, we're going to use those 12 months versus the calendar tax year, meaning if you filed your most recent tax returns, typically that's what the big bank's going to use when they're deriving your income, but you may have crushed it, in the most recent year because your business is improving and you don't have the ability to use any of that income from the year because it hasn't been filed yet as far as your tax returns are concerned. So for our example purposes, let's just say we're in the month of January and we're going to calculate all of our deposits going back from February of 2025 to January of 2026. And for those of you who are listening, you can locate the video episode on our YouTube page where we have the full screen share available. So I'm just going to enter in some numbers here based on, what someone's potential income would be so we can derive an average here. So for January, we're going to say that you had $10,000 in gross deposits, and we're just going to apply those for the majority of the year. So when we enter in December, November, October, September, August, July, June, May. Let's say for April, you didn't have any deposits, but for March, you had $20,000 in deposits. And then finally, for February, you had your typical $10,000 in monthly deposits for income earned. So what that would add up to is $120,000 in gross deposits, which would give you around $10,000 in monthly income. But here's where we apply the expense factor. So using the expense factor of 50%, we're going to cut those deposits in half, which would give you a qualifying annual average of $60,000 in income, which would give you around $5,000 a month for monthly income. So here's where having an expense factor can be extremely powerful in deriving more income. So let's say we change that expense factor in the drop-down menu to a 10%. You will see now that you're going to be using 90% of those gross $120,000 deposits, which is going to give you an average of $9,000 a month or $108,000 annually versus the $5,000 a month using the 50% expense factor. So why that's so important is depending on the home that you're trying to purchase, there is still a debt to income ratio when using the bank statement loan product. And although they go higher, typically 50 or up to 55% with compensating factors, you still have to stay within that debt to income ratio, which means how much of your reoccurring bills, including any existing housing or any automobile, minimum credit card payments, student loans, whatever is essentially reporting on credit, plus the new home that you're looking to purchase, divided by what your qualifying income is going to give you a percentage. And you have to typically keep that percentage at 50% or less in order to qualify to use the bank statement loan product. So as you can see, if you're applying a 10% expense factor, well, now you have a debt to income ratio at 50%. You can go up to a $4,500 max payment, versus if you're only using a 50% expense factor at $2,500 in qualifying income at a DTI of 50%. All right, so there you have it. That is the bank statement calculator tool located on the SCI website. Hopefully it seems pretty straightforward to you. Again, it's an incredible program in the non-QM space. If you are self-employed and you're looking to maximize your income in order to purchase your next home as a primary residence, second home, or even an investment property. And for other great tools and resources, head over to the scimortgage.com website where you can find other calculators for different types of income or lots of resources in order to further educate yourself on some of the amazing loan products that are out there in the self-employed space. And we also have our contact information on the website. We welcome the opportunity to connect with you and see how we can be a resource if you're looking to purchase your next property or further build your real estate portfolio. And until next time, let your income work smarter, not harder. Thanks so much for being a part of the community. We'll see you on the next one.